costly to start a business, especially in farming or ranching. However, from a tax standpoint, startup costs could be deductible depending on when the business begins. Joining us now to review deducting business-related expenses is Roger McEowen. He's with the Washburn University School of Law. Roger, as always, thanks for taking the time to chat with us today. So what exactly are the startup expenses?
Well, basically, Janet, these are amounts that are paid or incurred in connection with creating an active trade or business. And more specifically, what they are capital expenses that the taxpayer pays or incurs for investigating the creation or acquisition of a trade or business, or just simply creating an active trade or business, or anything that they engage in for profit in the production of income before the day on which the business starts.
So are the startup expenses totally deductible?
Well, again, as in many areas of tax, the answer to that depends. There is a code section that generally prevents a taxpayer from deducting startup expenses, but they can make an election to deduct business startup expenses on the return for the year that the business begins.
So when does the business actually begin?
Well, that's going to be a key, obviously, to being able to determine whether you can deduct startup expenses. And there's really no regulations that help define when a trade or business begins. So the question is answered based on the facts and circumstances of a particular situation and a large body of case law that's out there going back many decades. So basically what we're looking for is when the business begins to function as a going concern and is able to perform the activities for which it was organized, and then the taxpayer starts participating in it on a basis that's regular and continuous and substantial. And so it's a fact-based determination.
Roger, what would be the big takeaway to keep in mind?
Well, I think the big takeaway out of all of this is to make sure that you actually start an active trade or business. If you don't do that, then your startup expenses are not going to be deductible. So once you do start to actually run the business, then you're going to have ordinary and necessary business expense deductions on the Schedule F if it's a farming operation, on the Schedule C if it's not a farming operation. But there's this unique provision in the code that deals with these startup expenses in a very particular way. So you have to be very careful with that, and you need to be talking to your tax counsel if you're going to be starting up a farming business.
Okay, Roger, as always, thank you very much for your insight today. Roger McEowen, he's with the Washburn University School of Law, joining us on the phone today from Topeka, Kansas.